Let's talk about the chairman of Safaricom. Kenya yesterday blamed the tight operating environment of the country and the macroeconomics for the lackluster performance of the telco giant in 2022. Kenya's stock market has plunged below the 100 index reading as the local shilling is forecast to dip to 150 on the US dollar by December, and that's according to ABSA. Putting all of this and more together for me now is Ali Kansachu. Ali is a market professional and the CEO at Rich Frontiers in Nairobi. Thank you for making the time on the show tonight. So I hope you had a very great week so far, Ali.
Yes, thank you for having me, Person. Always a pleasure to speak with you.
Thank you. Let's start on the macro side. Thank you so much. Where is Kenya regarding funding support from either the World Bank or the IMF? The new president has been looking left, right, and center for this support. Where is money coming from right now?
So absolutely, there's been a definite pivot from east to west by this new administration. I think that's an optimal move. Chinese money is now hard to find. And I think the president has made a sensible decision, a geo-economic decision to pivot west. So he's made a lot of trips, as you know, to Europe. And last week, for example, we had the IMF chief in town. We had the Prime Minister of Japan. We had Olaf Scholz. So you can see there's a lot of support for Kenya right now. We're in a dangerous neighborhood, and I think the West is keen to support Kenya at this time. So the IMF, the World Bank, the multilateral institutions are backing Kenya. The question is, are they backing Kenya sufficiently given the current fiscal challenges? And is the money coming through fast enough? And then finally, does Kenya have a plan to get through this very difficult 24-month period?
Interesting, therefore, your outlook on the exchange rate. ABSA Kenya says the shilling could hit 150 by the end of this year. What's your take? How bad is it right now?
Look, at the moment, we're not transacting at the clearing price. There is the supply of dollars is being throttled, so this price is not a transparent one. I think if you looked for the clearing price, which is what I think the policymakers should be doing, because I think one of the strong strengths of Kenya is the convertibility of the currency. And this has been a historic situation for many, many years. I think if you went for the clearing price, you're going to overshoot 150. You're probably going to get to about 160, stabilize there, and then maybe rally a little bit to about 155. But the challenge for Kenya, of course, is that if you do that, the debt to GDP ratios get blown out, unfortunately.
Okay, let's get into the corporate news. By the way, I was listening to the chairman of Safaricom early morning yesterday explaining, giving some facts behind the figures of the earnings that was released, 22.2% downside. You saw how the market took that beating on Safaricom yesterday. What's your take on the latest full year numbers for this telco giant?
So what we saw, as you said, was minus 22 and change percent on full year profits. We saw, I think what took everyone by surprise was the increase in expenses, which had a 30% handle year on year. This was obviously partly funding the Ethiopian venture. I thought M-Pesa performed well. M-Pesa, I think, still has a lot of growth ahead of it. I thought data didn't perform too badly. Voice was poor. But I think the big drag on Safaricom is the investment that they're making in Ethiopia. And the fact that I think market participants are thinking to themselves, it's quite a long haul. The payback is not going to happen anytime soon. They revised the next full year earnings down, which verifies that point. And then really today we saw the share trade limit down most of the session, which I think is, the market is the message ultimately. And that clearly was a message. They've got another problem. They've got a lot of foreign investors in this share. And what foreign investors, the moment they see a lack of convertibility in the FX, it's practically a red flag, and they are prepared to get out at any price. And I think that's also putting further pressure on the share price for now.
Well, so when you look at the earnings that's coming through from 2022 because of the elections and then the first quarter of this year, do you think the last year's elections, the whole macroeconomic environment, do you think is resonating across other sectors in the market as well as companies in terms of how all of this are giving a pushback into growth that you expect from the numbers that are coming through?
So, it's interesting. If you split up the market a little bit, the banks seem to be doing all right, but they've got a different problem. The problem with the banks is really the balance sheet. They're overloaded government securities. As you noted, the T-bill sale had an 11% handle. 3-year bonds had a 14.4% print, which means that the bonds they're holding have to be revalued, and quite sharply. But within the banking complex, they seem to be, in underlying businesses seem to be doing well. Someone like Stanbic came out with really strong results for the first quarter. However, I think clearly the macros have started to hurt some of these companies, and Safaricom is the most visible because it's the biggest, and it's a very good proxy for what the economy is doing. You get an idea of money moving in the circulation, and my latest high-frequency data is that the economy has softened quite sharply in the last 4 weeks as well. So we got major challenges here. We're loading tax onto this very soft economy, and I think therefore we're looking at, in my opinion, a 24-month period when the economy is going to be a little bit like Muhammad Ali was in that fight in Kinshasa on the ropes for quite a while. We hope it comes back and punches the lights out, but I think that's 24 months away.
Interesting, but the market's been punched downside. Your all-share index is below 100 at the moment. Give me 30 seconds. What do you think could lift this all-share index back up above 100 and very strongly for the NSE?
Okay, so the biggest share at the stock exchange is Safaricom. We need a turnaround in Safaricom. I still think there's about 10 to 15% of downside just on momentum on that. I think once we get a basing effect in Safaricom, then we should see the index start to stabilize, but we're not going to see a sharp rally. The frontier markets are a little bit unloved at the moment. That's the major challenge. Kenya's quite dependent on foreign investors, and they are shunning us for the time being.
Interesting. I appreciate your time on the show tonight and your insights into the Kenyan economy and the macros as well. Have a great weekend, Alekan Sajo, CEO at Reach Frontiers in Nairobi.